Hold on tight. This one isn't rumor or hype. It's the kind of information that makes markets shift overnight. Just hours ago, Jake Claver dropped a single statement that lit the entire XRP network on fire. He said, "The XRP Ledger isn't ready for global finance because of its TPS." That one line, 6 words, sparked chaos across Telegram, X, and Discord. Because if he's right, then everything Ripple has been building for nearly a decade could crumble under its own weight. But what if he's not? What if the data he's referencing is already outdated? And the real story is that Ripple quietly solved the problem months ago. We're decoding the truth, the performance metrics, the hidden upgrades, and the corporate chess moves that prove Ripple may already be operating at global scale. If you hold XRP, this could be the most important intel you'll hear all year. Before we dive deep, hit that like button, drop a comment with your price prediction for 2025, stick around for the next 30 seconds, and subscribe to Matrix Millionaire so you never miss when the next major update drops. None of this is financial advice. It's research, analysis, and decoded signals from inside the system that most people still can't see. Now, let's break open Jake Claver's claim and see why the real numbers might point to a 2,000 XRP revaluation sooner than anyone expects. When Claver said the ledger isn't ready, he was basing it on that old baseline of 1,500 transactions per second, a figure Ripple published years ago. Back then, it sounded impressive, but not global. Visa moves tens of thousands per second daily, so his warning landed like truth. But behind the scenes, Ripple's engineering team has been rewriting the rules. Their latest tests show the XRPL pushing beyond 3,000 TPS with near zero latency. And that's before sidechains and subnets activate. Think of it like this. The ledger used to be a single-lane highway. Now it's a multi-lane network where validators process transactions in parallel and sync through a new low-latency consensus layer, 5 seconds or less per settlement, consistently. And when subnets go live, those lanes turn into infinite routes. Each institution runs its own private highway that anchors back to the main ledger for final settlement. Bob Way's original patent outlines exactly how, Visa-level throughput with blockchain-level security. Now add the business side that no one's talking about. Ripple's acquisition of G Treasury plugged it directly into 13,000 banks across 160 countries. That's not crypto hype. That's institutional infrastructure. Monica Long called it unlocking trapped capital. Translation: Ripple just tapped the 120 trillion corporate treasury market and built a bridge for that liquidity to move through the XRPL. That's the math behind Claver's $2,000 projection. Say not a guess, a liquidity equation. And this is where things get deeper. While retail investors argue about charts, Ripple's executives are sitting in the rooms where the future of finance is being decided. Brad Garlinghouse was at the White House ballroom fundraising dinner last week, the same table as global policymakers and banking heads. That's not luck, that's strategy. Christine Lagarde just made it clear that Bitcoin won't qualify for European central bank reserves because of volatility and compliance risk. So if not Bitcoin, what digital asset fits the criteria? Fast, regulated, traceable, energy efficient? Exactly. XRP. So when Claver says the ledger isn't ready, the truth might be the opposite. The world just isn't ready for how ready it really is. Behind every headline, behind every upgrade and acquisition, is a pattern, a deliberate transition from speculation to infrastructure. And if you've been watching closely, you already know this isn't hype. It's positioning. You've made it this far. Stay locked in for the next 45 seconds because I'm about to decode how Ripple's new subnet architecture and MPT token standard solve every scalability issue Claver warned about, and why it might be the final signal before XRP goes fully institutional. What Jake Claver said about TPS is what most retail investors still believe. But the data proves the opposite, and the timing of what Ripple just deployed changes everything. The XRP Ledger has quietly been evolving behind closed doors. Ripple's engineers spent the last 18 months optimizing validator coordination, rewriting how consensus finalizes, and integrating new ledger-level compression that lets the network process multiple streams simultaneously. That's how internal stress tests this year recorded stable 1,500 TPS with spikes over 3,400 TPS, all while keeping sub-5-second finality. Think of it as multiple motorways feeding into one express lane. Each validator handles its own lane of transactions, then merges them back perfectly in sync. No clogging, no latency. And that's before the big unlock, subnets and sidechains. Ripple architect Bob Way's patented subnet design lets entire banking regions or enterprise systems run on private rails, still anchored to the main XRPL for settlement. That means banks, payment processors, even central banks can run localized ledgers that clear in real time, all interoperable, all using XRP as the bridge. Matt Hamilton, one of Ripple's former engineers, said it best. When you combine payment channels, sidechains, and subnets, the XRP ledger can scale infinitely. This isn't theory anymore. The infrastructure is live testing now. What we're seeing is the transformation of XRPL from a fast network into the foundation of global settlement. Then there's MPT, the multi-purpose token standard. Activated October 1st, 2025. It's the biggest upgrade since XLS20. MPT lets both fungible and non-fungible assets exist natively on the ledger. No smart contract overhead, no external logic, no slowdown. That means a corporate bond, a tokenized fund, or a central bank digital currency can all move at the same speed and cost as XRP itself. Even under heavy issuance load, the ledger's performance stays flat. Every transaction still burns a tiny fraction of XRP, keeping spam impossible and deflation intact. That's efficiency on a level Ethereum can't touch. And Ripple's already working on confidential MPTs. Privacy-layered versions that use zero-knowledge rollups for institutions that need discretion while keeping compliance intact. So, the TPS problem Claver warned about? It's already obsolete. Ripple solved it, then built a highway system for global liquidity. Now, if you've made it this far, here's where the real opportunity comes in. Because while everyone argues about TPS and sidechains, retail investors still don't realize how early they are. I get a lot of people asking, where's the best place to actually accumulate XRP before this next phase hits? Personally, I use MEXC. It's reliable, fast, and they've been expanding liquidity pairs aggressively for XRP and FLR. They're one of the few exchanges that consistently lists early DeFi assets connected to Ripple's ecosystem. If you're serious about positioning ahead of the institutions, grab the link in the description. You'll get a bonus trading rebate just for using my referral. Again, not financial advice. Just showing you what I use. Back to the tech. Ripple didn't just make the ledger faster, they made it modular. Each subnet can run millions of TPS for regional banking clusters or government networks, then anchor final settlement to the main chain. It's the exact same scaling logic used by Visa's clearing systems, except here it's decentralized, auditable, and compliant. Once these subnets go fully live, we're looking at a settlement web where every CBDC, every tokenized asset, every corporate treasury transaction can move instantly and in parallel. That's MasterCard and Visa throughput with blockchain verification. And it's happening now. When you connect that to Ripple's acquisition of G Treasury, with its 13,000 banking endpoints and 2,000 corporate integrations, the vision comes into focus. Ripple isn't trying to compete with banks, it's becoming the infrastructure that banks will use. Up next, we're going to decode exactly how Ripple's corporate integration strategy with G Treasury and Swift host-to-host systems positions XRP as the settlement backbone of tokenized global finance. Stay locked in, because once you see how those pieces fit, the $2,000 XRP scenario stops sounding like speculation and starts looking like inevitability. What began as a question about throughput has evolved into something far larger. Ripple's quiet transformation into the financial backbone of a tokenized world. Because while retail argues over price targets, Ripple is executing one of the most sophisticated integrations in modern finance, embedding itself into the very architecture global banks already trust. When Ripple acquired G Treasury, it didn't just buy a fintech company. It inherited an entire institutional nervous system. More than 13,000 banking connections, 2,000 corporate clients, and a presence in 160 countries. That single move turned Ripple from a blockchain firm into a liquidity provider to the world. And here's the key. G Treasury's infrastructure is already Swift compatible. That means the same host-to-host pipes used by JP Morgan, HSBC, and Deutsche Bank can now carry XRP settled value instead of delayed wire confirmations. It's the transition from messaging to settlement, from your funds will arrive to your funds are there. This is what the entire system has been missing. For decades, Swift only sent instructions. Ripple sends the value itself. That's a structural shift measured not in percentages, but in eras. Ripple's strategy has always been misunderstood. People see XRP as a token. Institutions see it as a bridge engine. With MPT and subnets coming online, each bank can run its own localized instance of the ledger, compliant, private, and infinitely scalable, while settling through the main XRPL in seconds. That's how you move from 3,000 TPS to millions. That's how you connect central bank digital currencies, tokenized bonds, and corporate treasury flows under one protocol. And that's why Christine Lagarde's recent comment about Bitcoin being unfit for reserves was so important. It wasn't a dismissal of crypto. It was a green light for assets that are fit, fast, auditable, energy efficient, exactly the criteria Ripple has been building toward since day one. While the media covers ETF speculation, Ripple executives are attending policy dinners and private summits that decide how the next decade of money will move. Brad Garlinghouse's appearance at the White House Ballroom fundraiser wasn't just a photo op, it was a signal. Ripple now has a seat where regulation meets innovation. Every integration, every partnership, every meeting has been a piece of a deliberate sequence. Lay the rails, then enter the rooms that decide how those rails will be used. And that's why Jake Claver's warning actually validated Ripple's progress. If critics are still judging XRPL by its 2019 metrics, that means they haven't caught up to the 2025 reality. Let's get real about the $2,000 XRP number everyone's talking about. It isn't a speculative moonshot, it's a liquidity projection. If Ripple's network taps even a fraction of the $120 trillion in corporate treasuries and tokenized assets expected to move on-chain, the required bridge liquidity per XRP unit explodes mathematically. That's not hopium. That's supply and demand at a global scale. Institutions don't chase speculation, they chase efficiency. And right now, the XRP Ledger is the only public-private hybrid that delivers both. The matrix revealed every cycle has a moment when noise fades and architecture speaks. That's this moment. Ripple is no longer building the future. It's installing it, quietly, methodically, globally. From G Treasury integration to MPT activation to subnet deployment, each move is a line of code in the new financial matrix, one that connects banks, corporates, and nations under a shared ledger of instant settlement. So when people ask, is XRP ready for global finance? Remember this, it's already running underneath it. You're just seeing the interface catch up. This isn't about the next pump, it's about the next system. And those who understand the difference won't just watch history, they'll profit from it. If this opened your eyes, tap that like button, drop your take in the comments, and subscribe to Matrix Millionaire for the next decode before it hits mainstream. And if you want the complete visual blueprint of how this entire infrastructure connects, from subnets to corporate treasuries, download the XRP Millionaire blueprint linked below. Because the matrix of finance is already rewriting itself. And those who see the code first will own the future.